Have you ever wondered why the money in your bank account seems to be worth less each year? This is the unsettling reality of inflation, a phenomenon that gradually erodes the purchasing power of your hard-earned cash. When a government increases the supply of its fiat currency, like what transpired during the COVID-19 pandemic, the value of each unit tends to decrease. It's like adding water to a pot of soup. The more you add, the less flavorful it becomes. Now, let's shift our focus to Bitcoin, the first decentralized digital currency. Unlike fiat currencies, Bitcoin has a fixed supply. There will only ever be 21 million Bitcoins, and no more can be created. This limited supply acts as a bulwark against inflation, preserving the value of the currency. In the unpredictable world of fiat currencies, Bitcoin emerges as a beacon of stability. Imagine a world where the money supply is finite, unchangeable, and immune to inflation. Welcome to the world of Bitcoin. Bitcoin is unique in the financial landscape due to its fixed supply. Unlike traditional currencies, which can be printed at will, Bitcoin's protocol ensures that only 21 million Bitcoins will ever exist. This finite nature is what makes Bitcoin a beacon of stability in an ever-fluctuating financial world. But how does Bitcoin maintain this scarcity? The answer lies in a process known as halving. Occurring roughly every 4 years, halving reduces the rewards for Bitcoin miners, effectively slowing down the creation of new coins. This clever mechanism helps keep Bitcoin's supply under control, ensuring it remains scarce and valuable. Unlike traditional currencies, Bitcoin's supply is both controlled and scarce, making it a potential safeguard against inflation. So, in a world where traditional currencies are subject to inflationary pressures, Bitcoin stands firm with its unyielding scarcity. So, how exactly does this halving work, and why does it matter? Well, let's dive into the intriguing world of Bitcoin mining. Miners play a critical role as validators of transactions, and for their efforts, they are rewarded with newly minted Bitcoins. This reward process takes place approximately every 10 minutes. However, there's a catch. After every 210,000 blocks, the reward for mining is cut in half, hence the term halving. This mechanism has occurred 3 times in the past, in 2012, 2016, and 2020, and has played a significant role in shaping Bitcoin's economic model. The next halving event is anticipated to take place around May 2024, and it's sure to be a major event in the crypto world. Despite its potential volatility, Bitcoin's price has historically increased after a halving event, making it an intriguing prospect for investors. So, ready to ride the Bitcoin wave? As we approach the next Bitcoin halving event, what should we expect? And how does this impact Bitcoin's role in the fight against inflation? The halving event is a significant milestone in the Bitcoin timeline. It is a pre-programmed mechanism that reduces the rewards for miners by 50%. This event, expected to occur around May 2024, has the potential to trigger considerable market volatility. However, we must remember that Bitcoin is not just about these events. It's about the broader vision of a decentralized financial system. It's about breaking free from the shackles of traditional systems where a select few control the supply of money. It's about creating a world where we, the people, hold the reins of our financial destiny. In the world of Bitcoin, there are no sudden changes in supply. There are no decisions made behind closed doors that could lead to an unexpected influx of new coins. Instead, there's a transparent, predictable mechanism that controls the issuance of new Bitcoins. This mechanism is what makes Bitcoin a reliable store of value, a digital equivalent of gold, if you will. So, as we approach the next halving event, it's important to keep this broader picture in mind. Sure, there may be trading frenzies, sure, there may be price swings, but the core value proposition of Bitcoin remains unchanged. It is and will continue to be a decentralized currency with a fixed supply. Is it perfect? No. Is it volatile? Yes. But it's a step towards a future where financial systems are transparent, predictable, and controlled by the people. And that's a future worth striving for. So let's not get too caught up in the specific dates or the short-term price movements. Let's focus on the overall growth of the Bitcoin network. Let's focus on the long-term vision. In the journey towards a decentralized financial future, Bitcoin halving stands as a pivotal mechanism in the fight against inflation.